Good morning and welcome back to another pipeline trading video. Hope everybody had a great July 4th weekend. So today I'm just going to cover some things. I'm going to try and keep this video to 10-15 minutes, cover the overall markets, oil, some gold, Bitcoin, and ETH, the most important ones I want to go over because there's some things heating up and there might be a little trickery in the markets going on. So right now, first things first, I'm going to go over the S&P 500 and the Nasdaq. S&P at the top, Nasdaq at the bottom. Unless we make a new high here, guys, there's a very good chance that this could be a fake out. This is good consolidation if we were to stay in this range. But the reason for why I believe we're going to be seeing a sell-off pretty soon, and this is not a crash, this is a correction, is due to the fact that we have no momentum. Things are picking up. You can see the volume at the bottom has been picking up. Every time we go up, the volume's going up in the selling side. So that right there shows you that this could be a distribution phase. Still a little too early. We could get a massive leg up like we have been seeing. But the one thing that's been concerning to me, and I covered this before, and I'm going to say it again, we had a high, low, lower high, lower low, lower high again. So we have the potential of making a lower low going down to the 0.382 fib at 710. Okay, so that's where I would see this market potentially going down. And remember, we could keep chopping sideways and go all the way down to here for all I know, right? They could do this the whole summer. That's what makes this market choppy, is that you have to play the range if you want to trade it or if you want to wait for key levels. That's what I am doing myself. So if I go to the semiconductors, this is another thing on why I think the overall market is going to have a bigger pullback, which we're going to find out. We broke the 20-day. So let me get rid of this so you can see it. We broke the 20-day EMA. Okay, we broke it over here. We went back above, held it as support, held it as resistance, and then held it as support. So that's why you need to be careful and give it a few days if you're trading the daily to know exactly what type of legs it has or doesn't have. And if you're into the legs, well, this one might not have the legs you're looking for, if you know what I mean. Right here, we're getting a rejection at the 20 EMA. There's a very good possibility this is a B, and then C pullback, which, to be honest, is not a big deal. Look at the run-up we've had. So for this not to happen would not be healthy. It doesn't just keep going up forever. Now, this also ties into the bonus video I guys told you about. I'm not going to go too much into oil and the 10 years today because I made a 45-minute video explaining how this affects the entire financial system, the plumbing behind it. So if you look, oil's looking like it's getting some ground here and building a bit of a foundation. We could get another leg here. I like this section, but this is a level where you could start building a position or potentially selling cash secured puts so you don't ever pay the retail price. Okay, so I'm going to keep going so this video is not long. We go to Bitcoin. Bitcoin still has a little bit of room to the downside. Okay, now I don't know if I put this out, but I've been working on this to make it a little bit more clear so people could take a screenshot and you could validate this channel if my content is worthy of getting that thumbs up, getting that subscription, getting the subscribers to grow and share this channel. Please do so. Take a screenshot. Watch how this plays out. What's crazy about this chart that I have to talk about is the confluence in days. You're looking at roughly 1,066 days, 1,060, 1,054, somewhere in that range from the bottom to the top. Okay, that's what it's worked out to. What's crazy is the bottom, from the top to the bottom, usually is 365 days. Now, why is that crazy? That puts us at October 7th. which we all know what happened October 7th. So remember, why is that so crazy? Bitcoin is a algorithm that has been set in stone and is not changing. No one's behind it. It's decentralized. And remember what I was telling you to watch for. Okay? We're chopping down. We're chopping down. We're getting closer to a bottom. I don't know if the bottom's in yet. I'm not a fortune teller. We won't know until, guess what? Price goes above the 20. And then what happens, my friends? It holds it as support. If you've been following the channel, you should have finished my sentence. So that's what we're getting right here. You could do this as a bear flag if you wanted, but what I'm looking for is this. I want to see a trade and a descending wedge. That's what I'm looking for. Now, if I go to a higher time frame, not the monthly, the weekly, we could see that. Like, this is what it looks like towards the end. So are we done? No, because we could come all the way down to the target. I was talking about the second bear flag, which was 51,543. Now, remember, the head and shoulder move is 35,073 cents. Sorry, $35,073. Okay. Could we see a massive pullback and then a wick up on the weekly? Yes, we can. Look at this. This went from 61 to 49, close at 57. Do the math on that swing. Okay. We've seen it before. I don't know why people don't think we could see it again. It happens. It is part of this sector. But if you look at what the smart money is doing, they are in fact accumulating and buying around these levels. Michael Saylor sold. That's always an indication when he sells that, he's not a trader. He's not the smart money. Not to say that what he's doing may not be smart. But what I mean by that is, when he sells, it's usually towards the bottom, not even knowing it. And people make the same mistakes over and over and over again. And I am one of them. Now, another thing that people don't talk about that I love is this massive liquidity wick. That's what I call it, a liquidity wick. This shows you, just by looking at this candle, that there was a lot of volume in buyers. I believe prices could come down to this 49 area level, maybe wick below the second bear flag measure move to grab the liquidity around this area and this candle. What's interesting about it is we will not know until it happens. We have big confluence down here in volume. We have big volume up here in the 60s, 70s. So another thing that I'm just to explain this channel before I go, I'm going to try and take some of these off without ruining the chart because I'm not ruining the chart for anybody. This is my baby. Okay. We have a channel, a parallel channel. That's what this line is right here that we're at. Now we also have a megaphone channel, meaning it opens wider. So you can see it looks like a megaphone. That's connecting the highs. This is it right here. I should put it in a different color for you. Put it in red, and this bottom one I'm going to put in green. The reason for that is that's where, if it goes to, it's a great buying level. Now, remember I said confluence? Look at where this ends. We're on the weekly. So remember, we only have, I don't know, maybe 8, 9 candles left before we hit our target of the end in October. Okay. So why is this a big deal? Well, look at the confluence. This is what I'm watching. It doesn't mean it's going to happen, but there's a very good possibility that we could touch this megaphone line, which connects to the bottom of December of 22 and on. So this connects to March COVID, December of 22. Can we see it come here? Absolutely. Not that I want to see it there, but we could see it go there. What's interesting is it's in the middle of the bear flag and the head and shoulder move. So right here, this whole section, this is a good buying opportunity. Now, another thing I think of, because it's happened to me before, where I'm holding on to this one level, and if it only hits here, I buy. I change that. I don't do that anymore. If it goes down to here, I'm going to start accumulating some. If it goes down to here, I'm going to have some. And I'm going to make sure that I have enough that I would be comfortable taking on a bigger position here. So I'm not going to go all in here, and I'm going to go mostly heavier here and also have my downside. And I might even change that and start accumulating more here because I'm going to sell cover calls. I'm not going to be buying it directly. I'm going to be buying it through the ETF. So I'll sell cover calls, or if I wanted to be ballsier, I'll go here and I'll buy the 2 times leverage ETF, right? So that's what I'm watching. ETH, it's getting to the same type of thing. I don't think ETH is done yet from what I'm seeing. I do see another bear flag that we are in currently. This is bullish. We broke above the 20 on the daily on ETH, which is what you want to see. So what I'm waiting for is I want to see for this to be valid, for us to continue to go up, is a rip above 2471. If we get a rip above 2471 and then start pulling back, then I would look for the pullback. I'm going to draw this in for you so you know what I'm looking for. Let's say we got a rip up here, and then we got a B, C correction, then I would be going in around here. Or let's say, typically a reason I drew it like this is C goes to wave 4. I don't know what happened to the lines. No idea what happened to the lines. Something happened to the lines. No, I don't know why that was off. Why are there no lines? I don't know what the heck is going on with this thing, but it's been wacky. So that's what you'd see. Why? Usually wave C goes to around wave 4, roughly. Whether it's higher or lower, it's not going to matter. Now, here's what's crazy. I just drew this in with you freehand. I would bet that this would be a good fib level, like either a 0.5 or a 0.6. Yeah, close to a 0.5, right? In between 0.3. So, like, that's what you'd want to see. It's funny how it came in line with this and how it works. So, if we get a pull towards this level and then a retracement back to find the ground at 2000 or even here, that's bullish. That's where I would say the bottom is in. And look, it's funny when I'm drawing this in, look at where my C is. It's also back in October. So this is what I'm kind of looking for. We should get a good rip up. Might not be this week, it might be gradual. But ultimately, I don't know that if this happens, I would say the bottom's in. Until this happens, I am bias short. And the reason for that is we are in a bear flag. So I'm going to break down exactly what I'm thinking looking at this. We are in a bear flag. We did the cross on the 20, broke above the 50, failed the 50. So I'd want to see support at the 20, price break above the 50, and hold the 50 after we break the 20 as support. Then I would argue, like here, you play this candle, right? Look right here. We broke above the 50, held the 50 as support all through 1, 2, and 3. So you could do a 3-4 day rule. Okay. So you could buy here 21, 830, 86 as an example, and you put your stop loss here. So you're risking $100. Okay. You're risking 100 to make 300, right? You're risking 100 to make 250, 350. So those are good odds, right? If that's how I would play it. I would have my stop on one of these big candles, because look, it could do this. You got a big candle, and then boom, we broke below the 20. See this? This faked everybody out. So there's two ways you can do this. At the beginning of the channel, you would be a buyer with a stop here in case it's a fake out and we break down. If we were up here, to be honest with you, I would take my chances shorting it. Even though I'm bullish long term, this right here, based off of this formation, to me is a short. So you can see right now we're getting rejected at the 50. So there's a very good possibility that we could just start chopping all the way down, which wouldn't offend me. It wouldn't bother me at all, because that's good. Now, the thing here to keep in mind on why I say the bottom can be in, and I'm not sure, is this diagonal line is very bullish. We have held it during some insane events, right? June of 22 held, with the tariffs we held. And guess what? We broke below and now we're back above holding. So to me, you could draw it like this, or you can even draw it like this. Which either way, theoretically, this is still bearish. If we were to start going down like this, to me, that's bullish when we break. We'll break to the upside. But this right here, the reason why I'm saying we'll break it to the upside is because of where we are in the correction, how far we are to the bottom. If this was more in the middle, I would say this is bearish, because typically you're chopping and then you continue. Whatever this leg is, this is almost still like a bear flag in a way, right? I mean, this would still be considered a bear flag right here. I'd rather use the channel, see where we are in the channel, because if we break here and continue, there's a good chance. Now, the other thing on why I think we are closer to a bottom is BMNR. If you remember, 2 weeks ago or a week ago, traded all the way down to 2080. So it, in my opinion, was very telling that it had a front run on ETH. So it's kind of telling us there's a good chance that we're going to go here. I don't think we're going to the head and shoulder, but the head and shoulder gives us a measured move of $380. If that happened, like, I don't know what to tell you. That's crazy. Could it happen? Absolutely, it can happen. Anything can happen. So I am watching these levels. I have a more bullish thesis long term, but I wanted to draw all of this in so that you could take a screenshot and you could validate it, right? These are levels to watch. You'll see, am I right? Am I wrong? Are we going to hold? But for me, keep in mind, I already started building a position. I've been very open and transparent about that. And I'm comfortable because I'm selling covered calls. I'm selling derivatives. And I've been making really good money. So for me, it's supporting my family. My long thesis is this puppy rips. We see a 4,000 ETH. We see BMNR go to 40 or up minimum. So if I can make 3, 4, 5 times my money, I'd be really happy with that. I'm sure you would. And then keep in mind, it's probably more than that to me over a longer trajectory because I'm selling covered calls. So if I were to take the profits I'm making while holding this for this position, it's much greater. That's how I'm playing it. That's what I'm comfortable with doing while having, downside protection. So again, take this as educational. Think outside the box. That's the whole purpose of this. You could skin the cat many different ways. Don't have to do it one way. And I hope this helps. If you found this content helpful and you like content like this and my bonus video I did on the weekend explaining how oil and the 10-year can be affecting the entire plumbing behind the financial system and how it works, please subscribe. Support the channel so I can continue to do this and grow it, hopefully to the point where I'm able to do courses and things like that in the future. That is something I would love to do where I can help others. It's more gratifying than just trading and sitting behind a screen and making money, to be honest. It gives me some sort of bigger purpose than myself. So that's why I do the channel. And I hope that it helps to give you another angle on how to look at things. Don't be so closed-minded, and hopefully I could spit some wisdom and knowledge on my personal experiences in life that I've learned that education can't give you. And I always make a joke, I have some of the most expensive education in the world to what I've lost and gained in my life. So I hope everybody is having a great start to the day. Like I always say, stay disciplined, trade with intention, and God bless you all. Have a great day.